All right, we are live. It's been, I think, a week, maybe a week or two since we've done a live stream. So excited to get back to it. Going to be trying to do live streams Tuesday nights going forward through the rest of the year. The last 2 weeks I was at home visiting my parents, but now I am back and ready to work. So in today's live stream, like typically, we will go through the indexes, take a look at some other general market themes of the market, what's going on there, where's the cash moving to. Take a look at the potential leaders. If we have bottomed in the market, we want to immediately look to the strongest stocks in the market because those are the ones that are more likely to be leadership stocks going into the next bull market. I'm not saying we have bottomed yet. I'm just saying we want to keep that list of potential leaders always rolling. After that, we'll go through net new highs versus new lows. I have a little theory of what's going to go on in the market. Again, just a theory, but we'll see how it plays out. Take a look at earnings, upcoming earnings. We are now in the midst of Q3 earnings. We had Netflix report today. Positive reaction there, which is great to see. And then finally, go through my watch list, both on the long side and on the short setups. If we have any extra time, and I think we will, I'll be going to the comments, either answering trading questions along the way or going through any charts that you guys want me to break down. So I see Sam's already in the chat. That's awesome. Hey, Sam, how's it going? If you guys have any questions while I'm talking through the charts, while I'm talking through some of the graphs, drop them in the comments. Or if you have a stock that you want me to break down, if we have time at the end of this live stream, should go about an hour, I'll do that as well. This live stream is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down all of the setups. You can use the link in the description below of this video to try MarketSmith yourself. I think they have a deal going on. You can try 4 weeks or 3 weeks for $20 there. So first, let's cover the indexes, SPY, QQQ, IWO, the growth ETF, and then ARKK. From there, we'll go net highs, leaders, and earnings. So first off, SPY. Big reverse day. Let me change this to the track price. Big reverse day was on Thursday, right? We have the CPI print. Inflation comes out hotter than expected. Market was already at its lows, so we gapped down 2.5%, 3%. And very similar to the 24th of February. This is going back to what I think is going to happen in the market. Very, very similar action there. We had that reversal from minus 3% to we closed the day up 2.6%. On the 24th, it was a little bit stronger. It was, let's see, I think we were down 3% as well. Closed the day, only up 1.5% on SPY. So similar action on the 24th. We want to kind of use that as a template of what's potentially going to happen going forward. As you can see, volatility has been very high because just the next day, on Friday, we rally, take out the previous day's high, Thursday's high, run into the 21 EMA, and then reverse lower, close at the low of the day, and that was down, 2.3%. Monday comes around, we gap up slightly, I guess, and then close near the high of the days. And then today, I know the QQQs opened up 2.5%. I think SPY opened up about 2.2%. Above the 21 EMA, we sold off with the Apple news that they're cutting their production of the iPhone 14, and we closed kind of middle of the range today. Now, just really quickly, Netflix reported earnings. They beat on earnings, they beat on sales. They're up 14.3% after hours. So after hours, SPY is up another 0.9%. So will this gap up tomorrow actually hold? We'll see. But right now, what I want you guys to understand and what I'm saying so I feel better about this is don't mistake volatility for opportunity if you're a low risk swing trader like myself. This type of action where we're down 3% at the start, then we close up 2%, then we open up 1%, go down 4% from there. This type of action is going to stop you out of nearly every position that you put on a 3% or a 5% stop loss on. So even if the indexes are going up, that doesn't mean that we have to be being aggressive in the market. That doesn't mean we should be making money in the market. I've tried two trades at this point, not getting a ton of traction, not seeing a plethora of high quality setups in typical growth groups. So at least for now, I'm seeing all this volatility, and I'm happy that we're off the lows. I'm happy we closed over the 21 EMA, but we still need to see a couple more pieces of this puzzle come together before I can get aggressive on the long side. Very similar action out of QQQ. That was down 3%. We're not going to go through that entire story. A little bit weaker here than SPY, mostly because tech has been extremely weak. And in comparison, oil and gas stocks, which we'll cover in a little bit, have been extremely strong. So that's why SPY has been doing a little bit better than the QQQs. QQQ gapped above the 21 EMA and then sold off, closed under it. Now we're at 275. That's right on the 21 EMA after hours, even with a 1.3% bump. So we'll see how it handles the 21 EMA. Can we get a close above that area? Can we get a follow-through day tomorrow? That's going to help us out a little bit. At least on the QQQs, got more volume than the previous day. But this is more, just reading the Trader Lion newsletter, the daily newsletter here, more of a churning effect because we gapped up and then a lot of that volume came as we deflated the price. So a little bit harder to understand if you're brand new to the market, but the fact that we got heavier volume and we were up 0.8% on the day, you might think, oh, this is great. This was very constructive. But actually, we gapped up 2.5%, and all this volume was volume leaving the stocks. We're the sellers stepping in and pushing the prices down. So got to be a little bit cautious. Again, volatility is all over the place. We don't need to be aggressive right now. If we're at the start of a new bull market, bull markets last for years. We're going to make money. We just need to be a little bit patient here. IWO, this is the growth ETF that typically correlates the best with my trading and swing trading. So I know a lot of people use IWM, but when I traded with Leif Serrata's group, he talked about IWO and how that fits better with growth type trading. And I've kind of used both for a while and then have noticed that IWO fits better with my trading style. So that's why I go over it every day and then on these live streams. So IWO is more constructive. This price action is more constructive than both S&P 500 and the QQQs. We rallied today, closed above the 21 EMA, up 1.2%. We do have resistance in this area at 220. You can see last time we had like an island gap where we gapped up, had 3 days trading above the 21 EMA and then gapped down there. So there's still selling pressure at that 220 area. This is another area, if we get over and close over that, I'll have more confidence in the market. Doesn't mean I'm going to go all in, but it gives me a little bit more confidence to put on maybe a 20% position size instead of a 10%. Put on 3 different trades as they start to work versus 2. Just minor things like that. And last ETF that I like to cover is ARKK. This typically tells me are the oversold bounces that we're getting in the market, are they just coming from the crappy 2020 hero stocks that have been beaten down, or are they coming from more the new leadership names? So if ARKK is up a bunch and the indexes are up a little bit and we're coming off the lows, that's not too constructive, at least for my trading style, because I'm not trying to catch the low in any stock. But you can see a pretty meh day, up 1.6% today, 2.2% after hours. Got rejected right on the 21 EMA. A little bit harder to see on the screen, but not a definitive, not definitive information on this chart. But if we look at a couple of the leadership stocks, so we'll switch over really quick. So if you guys follow me on Twitter, it's at Nick Drendel there. I post this chart of potential leaders every single day after the close. And we're getting some good traction. Like the leaders are gaining some traction, but it's not exactly what we want to see across the board. If we go back to Market Smith here, ENPH we thought was going to be a leading stock. It was holding up the best as the market came in, and then eventually solar stocks got hit very hard, cut through that 50-day moving average. Now it's kind of just bear flagging around 250. A break under the low there could be a potential short. First Solar, another potential leader, made a new high. kind of that last day the market rallied over 140 and then has been selling off since then. Yesterday as the market rallied, this was actually down 4.1%. And then an inside candle today. Let's see if 120 holds, if we get a sell-off in the market. A couple other previous leaders were AMPY. Nope. What's the one I'm thinking of? I don't have it up here because I just erased it from the leadership group. But what I'm trying to say is what the leadership groups that we had before, which was like the solar, the alternative energy, that group has immediately disappeared as one that's been showing strength. And that doesn't make me too happy and doesn't allow me to get aggressive in the names that I typically trade, because these were stocks, ENPH, First Solar, that I was looking to get some exposure on as the market found its footing, but not anymore. Celsius is another great example of this, where this was a stock that I had traded at once off the 21 EMA into some strength. And then from there on, we had kind of like an inverse head and shoulders as we were building out the handle to this giant cup or punch bowl of death, as I've seen it on Twitter. We break the 50-day moving average on above average volume, bear flag, breakdown again. And then even today, while the indexes were up, we gapped up and had a really nice run to $95, but you could see sold off from 95 all the way down to 89.33 and back under the 21 EMA. So the typical, or like the stocks that I was watching as potential leaders, we're seeing a lot of churning there. And it doesn't mean we can't rally or have a sustained rally at this point. It just means that I'm looking in the wrong places, if that's the case. And if I'm looking in the wrong places, I can't get aggressive because I'm not seeing the type of setups that allow low risk entry points, stuff like that. So one thing that I wanted to cover here, and I posted this on Twitter the other day, was the net new highs. I wish I could zoom in on this. But basically what we're seeing here is this is net new highs minus new lows in the market. So obviously as the market trends down, we get more stocks making new lows than new highs. That's why we're in the red here. We had a couple days where we had more new highs than new lows, but not many. But what I want to point out is we set the low at the beginning of October with net new lows, or the lowest amount of, what am I trying to say? Highest disparity between new lows versus new highs. Then the indexes actually make another low on Thursday of last week, but the new highs minus new lows make a higher low. So that's some constructive action that we saw last time we were putting in a bottom before a tradable rally, where we had net new lows, and then higher low, higher low, higher low, and then boom, we had this nice tradable rally from the end of July through kind of the middle of August. So that's what I'm starting to see here, and as we come off the lows, we need a little bit more time. Actually, let me change this over to like a 9-month. So if we go back to February of 2020, February 24th on this day, here we'll switch over to MarketSmith. So on the 24th, we get that mega reversal, right? But as we were getting this reversal, there were very, very few high quality setups to trade off of, because the market was at a new low at that time, and then Russia invades Ukraine, we drop 3%, and then all the bad news gets priced in, everyone's on the short end, so the market hurts the most amount of people, and we start to rally from there. But there weren't any high quality setups, there wasn't very strong potential leadership groups to have a sustained rally. So we rally for 1-2 days, kind of trade sideways for another 2 days, get rejected at the 21 EMA, and then we come back to the previous lows. But as we come back to the previous lows here, you see net highs minus, new highs minus new lows puts in a higher low, and then boom, we do get a tradable rally at the end of March through April. So that's what I'm seeing right now in the market, and why I'm not being aggressive right now, especially we have a bunch of earnings coming up. But what I want to see is as we pull back, so maybe we rally for another day or two, but then as we pull back, we'll hopefully see another higher low on the new highs minus new lows list, more quality setups start to form, and maybe a potential leadership group other than an oil and gas stock and biotech comes to the market. And that would help give me more confidence, like we got in between the May low, then June, then a constructive kind of sideways action, and then a nice tradable rally here. So I don't want to try to make a bunch of money in this move right here. I want to be patient, wait for high quality setups to form as we chop sideways and really exhaust both buyers and sellers. And then once we get more high quality setups, we get those net new highs actually turning to our side, or at least putting in higher lows, then there's a higher probability of a sustainable rally up to the 200-day moving average or something like that, at least a tradable rally. So that is what I am looking at right now. And this kind of correlates with David Ryan, what he said on Twitter today. If you don't know David Ryan, definitely follow him. He's a 3-time U.S. investing champion in the 80s, I believe. He said, tradable bottom is likely in. Most indexes pulled back to pre-COVID highs. Near-term positives include GOP majority in Congress, weaker dollar, slowing inflation, and interest rate stability. He's also looking at the 200-day. If we go back to MarketSmith, that 200-day moving average is where we've seen the bear market rallies kind of peter out at. But at least we get a tradable rally up to that point. So there's starting to be a little bit of sentiment change. But I just don't see the setups right now to get aggressive on the long side. So I'm thinking we kind of do more of a February 24th, where we rally, then come back to the lows, or at least pull back, have another little bounce, pull back, and then get that sustainable rally. Very similar to June. We put in a low, bounce, put in a higher low, bounce, higher low, and then a sustainable rally to the 200-day. Now I know QQQ didn't hit the 200-day in that rally, but SPY did. All right, so I think that was it. I just want to cover earnings super quick. Let me switch that. So we had Netflix. We already covered that. United was up, I think, 8% after hours. Intuitive Surgical, ISRG, was up 7.2% last time I checked. So the 3 big stocks that were reporting after the close all had positive earnings reactions. So that's a good sign. It doesn't mean the market has bottomed yet, but good sign, good start at least. Tomorrow, before the market opens, we have ASML, Ally Bank, Abbott, a couple of names that I know of, Travelers Insurance, not the company I work for. But then after the close, we have Tesla. That's the big one. How Tesla responds, because if we look at the chart, Tesla is in some major trouble here. Let's go to a weekly chart. Potential head and shoulders, left shoulder, kind of a 2-pronged head here, and then right shoulder. We're right on previous support area. So if Tesla comes out with poor earnings, this has very little support until the 150 area. If they have great earnings, then they're going to jump into an overhead supply zone of the 10-week moving average and the 40-week moving average, and some overhead price action as well. So even if they have great earnings, that kind of builds more into, okay, risk is coming back into the market. We can start to at least dip our toe into some quality setups, but I don't know if Tesla is going to be the stock that I trade unless unless they have phenomenal earnings, break out over 300, and then there's less resistance up top. But I don't see that happening, but the market could do whatever it's going to do. We just have to interpret it after the fact. So I never want to start a new position right before earnings. That seems like gambling to me, especially because stop losses don't work after hours, so I can't really I can't manage my risk the same way I can when the market is open. Back to the earnings. Lam Research, Alcoa, that's AA, Las Vegas Sands, STLD, all reporting. So a couple good names, or at least familiar names, reporting after the close tomorrow. Then we have Snapchat on Thursday, another airlines, a couple airlines. And then next week is really like the big week for tech earnings. But we are definitely in the middle of earnings season now. All right, so we went through indexes, new highs, new lows, leaders, and the earnings. Next part, I'll go through my watch list, and I have this kind of grouped up into 3 different groups: oil and gas names, coal, and biotech, and then just like 2 randoms. So, and then a watch list short that I'll cover pretty quickly. But if you guys have questions or any charts that you want me to go over, drop those in the comments. I can see them. And let's see, what do I think about all the oil and natural gas sectors? Perfect, we're going to talk about that. Take a look at AEHR, we can cover that. That is a double bottom action. Yeah. Okay, so let's start off with oil and gas. Just taking a look at the energy. Whoops, let me switch this over so it's a little bit bigger for you guys. Just looking at the energy sector, XLE, you can see we put in a higher low here. Or overall the key moving averages, price is starting to tighten up, and we did close in the upper half of the daily range today, 68th percentile, and you can kind of just draw, whoops, let me change this. You can just kind of draw a trend line down, and we have 2 daily highs right at the same price. So this ETF is something that I'm watching for. Also, the just 2 times ETF of XLE. This is ERX. If I'm trying to get a little bit of leverage on my position, instead of taking an individual trade or a trade in an individual oil and gas name, I could just pick up ERX and have that exposure to the energy sector. But I'm going to go over a lot of these charts pretty quickly. So I'm going to give you 10 seconds to grab a pen and pencil. These are all oil and gas setups that I'm watching. I think there's just so many oil and gas stocks setting up that I'm more apt to just buy ERX versus trying to pick the individual stock that's going to hold up the best. But we'll go through each of these maybe like 10 seconds per chart, but get your pencil or pen ready. You're watching this on a laptop, you're taking notes in OneNote. But okay, so AMPY, above kind of the W or the middle part of the W here, so I like that. Good relative strength. Overall, the key moving averages. Volume is starting to lighten up. Looking for a break over 9 on this one. Next, we have APA. And all these are oil and gas at least related, so they might be in slightly different groups. Like this is oil and gas international exploration, 9th out of 197 groups. And then AMPY was oil and gas US exploration. Just the theme, guys, just the theme. So APA, a little bit weaker here, but it does have a lower risk entry point. Just a break over today's high, and then a stop loss under the low would get you under the 21 EMA as well. CIVI, this one's a little bit less liquid, so don't love that. 2 daily highs right at the same price. ERX looks like a better chart to me, but again, fitting in the theme. CRK, oil and gas US exploration. The 8-day EMA, the 21 EMA, the 50-day moving average are all around the current price. You could draw a downtrend line. Whoops, temporary pen. You could draw a downtrend line right through there. Not perfect, but basically breaking over today's high would get you over all those key moving averages and that poorly drawn downtrend line. So that's CRK. DINO, this is much stronger than some of them. Oil and gas refinery. Basically right at previous highs here at $58. 2 daily highs right at the same price. This one seems like it has a lot more power than the others. I haven't had success trading this in the past, so it does kind of chop around a little bit more than I would like, but it does have the extra strength and the extra power if that group does move higher. DVN also up there. Nice. I don't know if that's really a cup with handle. It's basically back at the lows there. But now price is consolidating. All the key moving averages underneath the price and break over today's high. You got your stop under the low in the 21 EMA, about 2-3% there. MTDR, also pretty close to previous highs there. Ran from 45 up through 60, so would that be about 40%, 38% gain, in just a couple trading days, and then price tightening up. So no one's really in a rush to take profits even after a 40% move in the stock, 38%, whatever it is. And now it's flagging out really nicely. You could try to buy, like if I'm going to buy these individual names, I'm not going to be trying to buy them as they're extended up to a very, very clear pivot at $64 here. I'm going to be trying to buy them like, let's take a look at like the 5-minute chart. Just at like 62 or 62.10, somewhere like where I can get it a little bit lower and my stop loss under a key moving average or a nice round number, something like that. What else? And the last one in the group is Occidental. I feel like this is the name that all the swing traders are watching, and Warren Buffett is just accumulating like crazy. Kind of has a head and shoulders look to it, possibly, but at least in the right group. And we did bounce today at the 21 and the 50-day moving average. Also has the 8-day right below price. So a nice kind of launch pad setup forming there, and has super strong fundamentals. So 1, 2, 3, 4, 5, 6, 7, 8 oil and gas names, oil and gas related names on the watch list. For me, I just want to keep it simple. ERX is going to be 2 times the XLE and just break over 60. That's what I'm looking at with the oil and gas names. The coal names, we saw CEIX kind of try to break out, reverse lower, bounced at the 50-day today. Not as, I don't know. I don't love that price action. So looking a little bit different at AMR. This is one that I've traded a couple times in the past. And then on a 5-minute candle, you can see a downtrend line kind of correlates. Downtrend line today, and then a flat top entry at 155. So if we're looking for lower risk entry points where we can keep our stop under the 8-day EMA and the previous day's low, like Thursday's low, or not Thursday, Monday's low, I would want to try to get in a little bit lower in price instead of trying to like buy through 160, the break over today's high. But this one held up a little bit better than CEIX, closing the 29th percentile of the range. CEIX was 20th. BTU is also energy coal. I mean, 6th strongest group in the market. So that's something that we want to keep track of. But this is another one that's a little bit more liquid than the other two, AMR and CEIX. Put an inside candle today, closed right on the 8-day EMA. You have that nice downtrend line. Terrible at drawing that, but right through there. So just a break over today's high is somewhere that I'm watching. And I'm not going to be taking every single trade that I talk about, right? That's not the goal. It's like you build a watch list, and then even if you don't take the trade, you can pretend like you did so you can get that feedback from the market. Okay, I'm looking at AMR through 155. Did the stock go through 155? Yes. Did we close over 155? Yes. You do that on 15 names that are potential setups, and then you get more feedback from the market without having to take that additional risk. So those are the 2 coal names, BTU and AMR, that I'm watching. Biotech's also a theme that's been working. I got a question right here. Am I all cash right now? I am 90% cash. We'll cover one of the stocks, the one stock that I'm in right now. And then a couple other trades that I took today that I ended up just scratching. But 90% cash right now, just dipping the toe in the water. So biotech stocks, the first one that comes to mind is ACLX. This was on my breakout watch list video on Saturday when I posted it. This is one that I've been watching for a while. It does trade pretty thin. Let's see, today was 220,000 shares traded. So definitely on the thin side and biotech, so maybe you just skip this altogether. But this does have a lot of power. Went from $6 all the way up to $26. Then from then had a, what was the low here? The $13. So about a 50% pullback. And when you do pull back about 50%, you're not likely to have a breakout from that point in a couple weeks. You really need a couple months to really form that base. And it looks like we're starting to form that up pretty nicely. Now, coming into the week, it looked primed to take out this 1975, 1980 area and then go through $20. But on Monday, we had another shakeout under the 8, the 21 EMAs, and the 50-day moving average. but came down and buyers supported this at 1750. The low was 1756. So 1750 is potential support there. And then today we were up 6.2%. Came right back to that pivot. It's still pretty wide action, but as you can see, from a 50% decline and a 30%, 25, 20, these are made up numbers, but you can see like volatility is starting to contract. Volume is also kind of drying up here. I would love a couple more days where this tightens up under 1970, like 1980, whatever the high was here, 1982. If we get like 2 or 3 days with 2%, 3%, like daily ranges instead of 7 or 8, whatever we had today, that would be ideal, especially because this is a thinner traded stock. You can't size it up as much given the market and its biotech, and these daily ranges are still pretty wide. MIUX, another one with a lot of power that I've been watching, does have some overhead supply here, so if that's not your thing, then you don't need to look at this, but moved up from $3 all the way up to basically 12. Massive volume coming in. Let's see. First day was on 4,200% the average daily volume, then 1,600% the average daily volume, then 900% the average daily volume, 800%. So we're getting a ton of volume coming into this name. And this chart looks pretty bad on the daily chart, but if we go to like maybe a 30-minute, this looks much more constructive to me. And maybe this is a sell-off. We do a bear flag and then we break to the downside. Possibly, for sure possible. But that's why I would want to buy on strength and not weakness. Like if we're coming back into this area, back into like this support, we can easily just break down here. But what I'm looking at, I mean, it's not perfectly drawn, but around 9, let's see, track price, 970, 980. I'd probably wait for 980 as a potential entry point there, but also another biotech, so you got to be a little bit more cautious there. MYOV, this is the stock that I'm currently in. I have a 10% position in this. This is one that had a high volume close, HVC. This is the highest volume in a year, so clear sign of accumulation on the 3rd here of October. Volume was 760%, the average daily volume. We were up 36%. We closed near the high of the day, but did get kind of stopped right at $25. From there, the market did rally one more day, so we did get a move up 4%. And then from there, the market started to sell off, where this just kind of traded sideways, allowed that 8-day EMA to catch up. And then the last 2 days, so I bought this on Monday as it broke over $25, and then it closed right on 25. Didn't hit my stop loss, so just holding on to it. Even today, didn't hit my stop loss, so still holding on. My stop's just under Friday's low and the 8-day EMA, so maybe I get stopped out right away tomorrow. Who knows? But the reason I'm looking at this is how AKRO set up and then took off. Now, it's not acting exactly the same, so my hopes for a breakout like this is definitely dwindling. But AKRO, also a biotech stock, was up much more, so much more powerful setup. Was up 136%, up on 3,700% the average daily volume, pulled into the 8-day EMA as the market sold off. And then as the market pressure relieved for a little bit, had a nice run from 27 all the way up to 40. And I mean, this is still going up to, what was the high today? 41, 40. So going back to MYOV, same group, same type of setup, not as powerful. So we understand it's not as powerful of a setup. Even as the market has rallied, this isn't taking off. So my patience is dwindling, but it's right near my stop anyway. And my expectations are going to be lower for the trade. So instead of going up 40% like AKRO did, I know this doesn't have the volume accumulation, and I know this hasn't shown as much relative strength as AKRO did. So if this goes up 10%, I'm probably taking a majority of the position off. So that's how I use like a previous trade or previous setup to help shape my expectations for the next trade there. Two more biotech stocks, VRNA. Another one that had a lot of power as the market continued to dwindle. It did undercut the 50-day moving average. I don't love that, but that's why I didn't immediately take it as it came back through the key moving averages, came back under it again, and now we're starting to tighten up, closed right at that 50-day moving average. Just looking for a break over 1050. Another one that I might not be trading at all, but definitely not with a lot of size. It is a thinner traded name. Let's see, today was only 96,000 shares traded. Final one is RYTM, and this is one that is on the on my leaderboard at this point. It had a massive run from $5 to $25. Kind of saw some volatility there. Had a little run up to $31 before a secondary offering brought it down 25% or 24% the next day. But I'm really surprised at how well it's held even after that 24% distribution day. So we got that massive sell-off, a little bear flag, broke down to the 50-day. 50-day supported it there. Then we had another rally up. And at this point, I feel like everyone's forgotten about this name. So I like that no one has been posting about it. And we're starting to see price and volume start to tighten up. It's still pretty wide and loose action. So again, not going to get super aggressive with this. But we do have a downtrend line to work with. Don't have to draw it. And just looking for a break over $24 or even just a break over today's high, $24.34 as a potential entry point here. Just get above those key moving averages and above that downtrend line on a biotech stock that has a lot of power and didn't collapse when it had every reason to with a secondary offering after a 400% rally. Just a couple of random names. Sweet Greens, this was my pick for the Wolf Financial stock pick of the week. I know it's under the 200-day moving average. It's not ideal, but it is forming a launchpad setup where we have the 8, the 21, the 50-day moving average, all underpriced, all within 1% of each other, and all of them are starting to curl up as well. So as market pressure relieves, this shouldn't have any reason not to at least rally to the 200-day moving average. Now, I was watching this today as a potential entry, but unfortunately, we had that gap up in the market. This gapped up over the previous day's high, which was going to be my entry point. So I'm not chasing anything in a bear market. Even if we are putting in the bear market lows, I don't want to chase. I'll get my low risk entry points eventually. And then today, got stopped right at $20 here, right at previous resistance. So maybe it comes back in to the 8, the 21, the 50-day. If the market sells off tomorrow after a strong open, something like that. And then we just tighten up even more for an eventual break of $20 with the target at that 200-day moving average for 10% gain. Again, nothing crazy. Market of singles and doubles right now. Not much more than that. And last long setup I wanted to talk about was UAN. Couple downsides of this. It's thinner traded, less than 100,000 shares. The base depth was over 50%, so not great. So you have to definitely lower your expectations on the trade. But from there, we had a nice move up to 140, down to 100. And now we're right at the 8, the 21, and the 50-day moving average. Just a heads up, if you trade this, you'll also have to provide a K1 form when your taxes roll around because it is a partnership stock. I am not very well versed in taxes. My tax guy just said I needed to give a K1 on this when I traded in 2021. So if it's not a perfect setup, maybe avoid this just so you avoid the tax hassle there. All right. I see AHR in the chat, so let's go over that one really quick. This is on my leadership board, the 12 potential leaders in the market. And I love how it's been acting relative strength-wise. It's just so volatile. It's a very low float stock. Only 27 million shares out there. So when the stock starts to get accumulated, like it did from this $5 area all the way up to $20, it moves quick. But also when people start selling, it moves down quick. So You got to find a time where you can get a low risk entry point on it. I haven't found that time right now. It had earnings, I think 2 weeks ago on the 7th here. Very strong earnings, very strong sales, strong after-tax profit margins improvement, all good stuff. It was up 23% on 500% the average daily volume. But then the market doesn't cooperate. So we sell back down through all the key moving averages. Then on Thursday, we get the reversal, so we're back over them. Then on Friday, we reverse again, so we're back under them. Then on Monday, we rally back through and take out the high. And then today, we gap up. So this type of price action is so frustrating for swing traders because you'll see, like, when you see volatility in the market and you're on social media, someone is going to be posting about how much money they made. Either they were short and the volatility brought the stock market down, so they're making a bunch of money, or there's going to be someone that was super long and kept buying the dip, buying the dip, buying the dip, and eventually, as the market comes off the lows, they're 100% invested because they've been 100% invested, and they catch moves like this. And they get to celebrate that, which is great. I want people to make money. But as a swing trader who's been 100% cash or 90% cash for most of this, these are the days that are really frustrating emotionally, especially when you go on social media, because people on both sides every single day are going to be making money. And you're just like, I can't find a low risk entry point. So I'm not trading and the indexes are up 3%, or I could have shorted, the indexes are down 3%. So if you're feeling that way, just know that I'm also feeling that way. And the best thing to do is just to be patient. There's 1,000 different ways to trade in the market, but if you listen to Mark Minervini, if you listen to Ray, the people that make the most money specialize in one type of strategy, and they master not only how to trade that strategy, but when that strategy becomes more connected with the market environment. Right now, this market environment doesn't match my low-risk swing trading strategy very well. So people are making a ton of money. I'm not making a ton of money, but also, when people were losing a ton of money, I was sitting in cash. So it's a give and take. There's no perfect strategy that fits the market environment at all times. It's better for you to pick a trading style that fits your personality and then just go 100% into studying that strategy, knowing when it works, knowing the market environment that it works on, and try, like, I like going on social media. I like looking through charts that people post, but if people are posting about how much money they're up and you see the indexes are up a bunch, don't get FOMO. There will be a time, if this is the start of a bull market, there will be a time to make a lot of low risk money. We just got to be patient and survive until then. All right, a couple shorts that I'm watching for. First is ALB. This was actually on my long setup, I think last week or 2 weeks ago, and then we have this quick break under all those moving averages, the 8, the 21, the 50-day, down on above average volume, down 7.9% on 150% the average daily volume. We get that reversal, pushed even lower and then eventually reversed off the 200-day, and now just kind of bear flag into the 8-day EMA. This also closed low in the daily range, 24th percentile today, and I'm just looking for a break under 250 as a potential short there, and definitely going to cover probably a majority of it at 230 where the 200-day moving average is. This is kind of how, this shows you how much you need to just stay on your toes and be flexible with the market environment and what the market's giving you. Because this was I wouldn't say a high quality setup, but a stock showing relative strength. The relative strength was in an uptrend. And it was something that, okay, we were going to get a low risk entry point if we moved up on this day versus down on the day. And I would have probably taken it to the long side. But the market said, nope, we're selling this off. And now just a couple days later, it turns into a short setup. So don't try to argue with the market. Just whatever the market's giving you, find your low risk entry points and then trade off that. Be flexible and just, you're not going to boss the market around. You can have a theory, like going back to my QQQ theory with the net highs and lows and what we need to see in the next week or two before a sustained uptrend. That is just a theory, guys. Like, if I start to see price action that's different than what I have laid out in the first 10 minutes or 15 minutes of this live stream, I'm going to adjust to the market. I'm not going to try to say, no, the market has to do this because that's what I said on a YouTube live stream on a Tuesday night. Who am I? I'm no one. Listen to the market. Next, we have Asana on the short side. Hard to see on this chart because of how obliterated this stock is. We can zoom into a 30-minute. Basically, just looking for very, very weak growth stocks that aren't trading, aren't like blasting off the lows like Roblox is. This, just an uptrend line that if we break under that, we also have a couple of lows that held today. I would want to try and get my entry in just above $20, so whatever this was, 2020. So then if we do get a kind of flush and I'm in the money and then we come back up to this area, I could avoid getting stopped out if I try to move my stop a little quickly to my entry point, because I think on these flushes and then bounce backs, we're more likely to take out the whole number and kind of scare the people that are short away before another leg down. So around 220 is where I would want to take the short on weakness, just like I'm buying stocks on strength. I want to go with the flow of the market. Just a very weak growth stock. Bumble, also just another very weak growth stock. Had a very high move today, went up all the way to 24.20, then closed down 1% on the day, closed in the lower quarter of the daily range, just looking for a break under the low of today as a potential entry point there. Celsius, we covered this a little bit earlier, but punch bowl of death is what I've been hearing on Twitter. I haven't heard that term before this chart, so that's kind of cool. And just this action where we tried to rally. If you were short, you got shaken out on a move like this up to $95, but then it punches through 95, nice round number, 95.78, and then we flush lower, only up 0.5% today, bottom fifth of the daily range, just looking for a break under the low today, and then you're under the 8, the 21, the 50-day moving average, which now is downtrending as well. Carvana, it's my favorite stock to short because it's an impossible daily chart to see on MarketSmith. Those are typically the stocks that I want to short when we do get oversold bounces in the market. Going to a 30-minute chart, we put in a new low at $17 here, got supported once, twice, but I mean, for how badly the stock has been beaten down, the fact that the indexes rallied 6% off the lows, and I mean, this got, much more than 6%. What is it, 17 to 20? That's about 15%. Back on the daily chart, last time we had an oversold bounce, this went from 20 to 60 for like a 2x. So the fact that it's not finding much buying support and more people are just coming in and selling it shows a lot of weakness in this name. And then looking probably for just a break under the low, the last 5 or 30-minute candle, 1820 area, and then really put the pressure on if we break under 18 for Carvana. Two more on the short end, and then we got 12 more minutes, so any other trading questions? I see a couple other stocks that we'll cover, but drop them in the chat. Make sure you guys are leaving a like on the video, helps me and my channel get out to more traders. And make sure you're subscribed because I'm doing this trading live stream on Tuesday, working on a series of trading audits, and then watch this video every Saturday. I think I'm going to push that too. Next short setup is Duolingo. This is one that had a major sell-off, down 15% on above average volume on Friday. 2 days rally. So didn't even rally much on Thursday. Actually, it was down 5% on that Thursday that we got the reversal, and then sold off down 15% on Friday. From there, we've had a 2-day rally, lower volume, back up into the 8-day EMA. Also, you have the 200-day moving average and a lot of price action over that area. So just looking for a reversal from here. Ideally, we punch through that 200-day EMA. I see it's down 5% after hours. We'll see if it's actually down 5%. But if we're going to gap up, unless something terrible happens pre-market, we're going to gap up tomorrow. So ideally, this also gaps up over the 200-day moving average into this like 21 EMA at $93. And then if we start to see weakness, we fail through the 200-day, that's where I want to start shorting Duolingo. Last one, another one that's very hard to see on the daily chart is SE. C Limited, we'll go to a 30-minute. Very similar to Asana and Bumble. This is just a growth stock, a beaten down growth stock that doesn't seem to be rallying as much as the other stocks in the growth class that's getting that oversold bounce. So just a break under $53, potential short there. So that's everything that I had to cover. Let's go through what you guys want to see. CAH, yeah, so this is a stock that I had on my breakout watch list. Also had on my focus list today. I decided to go an oil and gas route with ET, right? ET? Yeah, ET instead, but I definitely should have picked CAH. This is one that it had this really nice move from 50 to 70, about a 40% gain there, but you got to understand, like, you got to look at the weekly chart and really understand how this stock tends to move. And I knew after a move like that, it would need a lot of time to digest. So giving it a couple of weeks is kind of putting in an inverse head and shoulders. I know it says cup and handle here, but you got the left shoulder, the head, the right shoulder above the low of the left shoulder. And then price tightened up. I don't know where we opened today. I think we opened like right at the buy point. The index is just gapped up, and I didn't want to put on a ton of exposure, but this was very buyable today right at the open. Closed nice, up 3.5%, 3.6%. Closed on above average volume right at the high of the day, above 70. Great, all good things. Trading IQ bringing the stock to the attention. And FOUR, if we go to, we're looking at the same stocks because, where is it? I have it right here, FOUR as well. So I know when Trading IQ's bringing the stocks, I better have them on my watch list as well, and I do. This is in finance card, credit card payment, so weaker group, but has been putting in a higher low while the index has made a lower low. So the relative strength is picking up here. Finally getting over that 200-day. Now this is a stock that you can see doesn't have that characteristic of immediately rejecting at the 200-day. It tends to pop over and then get rejected. So this is just 1 day over the 200-day. And while in some situations I want to get as low of price as possible to get my stop loss under key moving averages, because we know 1, 2, 3 times we've already done this where we popped over and then eventually pulled back in. Now that is part of the market selling off as well. But I would rather this kind of break out and move a little bit without me and then kind of pull back and then form another buy point around 50. Now, again, this is me just making things up, but if I'm going to trade this because of what I've seen in the past, I would rather it make the initial move without me and then pull back, give a low risk entry point and go from there. But strong fundamentals on this, just a weak group, but relative strength wise, this is holding up really well. And I did put it on the watch list, or just like my general watch list for tomorrow. FWRG, sorry, Lisa, I should have got to that first. Retail restaurants, first watch. So I haven't heard of this before, but that retail restaurant group, same with like Sweet Greens. What's Portillo's up to? Nah, still weak. Sorry, back to yours. FWRG. 30th strongest group in the market. So as we were talking about like at the very beginning of the stream, tech is still the weakest. That's why QQQ is underperforming SPY. More oil and gas names than SPY as well, but also retail restaurant, not a tech-heavy group, obviously. So this one, don't love how much volume came in on the sell-off here. This is another one kind of similar to FOUR where I would rather have it make a move and then come back and tighten up without me. Also, a little bit on the thinner traded name, 266,000 shares traded, only a $16 stock. So if you need to get out of this, chances are like you're going to get some slippage on it. So I like how it bottomed in March, putting in higher lows, higher low. It's starting to show some relative strength. Again, that retail restaurant group, it's probably getting a little bit of a break because it's in that group. I just don't see a low risk entry point on this name just yet. Couldn't hold over the 50-day moving average just yet. Another one I would rather let it go and kind of prove itself a little bit without me. And then as it comes back in and tightens up, then we can get we're paying more for the stock, but we can get a lower risk entry point, if that makes sense, Lisa. I nailed an awesome trade via IGL. Oh yeah, look at that. Oh, that's super thin. Oh man. I would not have the guts to trade a stock that only trades 7,000 shares a day, but yeah, I mean, look at that. You're going to have some volatility with that. Let's see. GENI. Yeah, starting to shape up. You know the drill, though. We've been on enough live streams together. Under $5, just not my thing. I got one more question here. How do I position size? So this is a great question, Lisa, and I should make just a separate video on this. But a couple different factors. The first one is the M factor that William O'Neill talks about, the market. What is the market doing? Right now, lots of volatility. Yes, we're trending up in the very short term. I think we're, for the most part, like either at or above the 21 EMA on SPY. QQQ is still under it, but we're still seeing a lot of volatility. So in a perfect world where I'm sizing up as large as I can, the price would be above an uptrending 8-day EMA, 21 EMA, 50-day, 200. We're still under a declining 200-day, still under a declining 50-day. There's a ton of overhead supply here. So I'm not going to be sizing up any trade as much as I would while we were in a bull market in 2020 and 2021. So that's the first factor, is the market. How's the market handling? Another thing is kind of going back to what I said earlier, where we have a bunch of stocks on a watch list or a general watch list, but we don't take every trade. Going through those watch lists and seeing how many stocks went through my buy points and how many stayed through the buy points is going to give me feedback day to day. So like out of the 10 stocks that I watched, 7 of them went through the buy points, 5 of them held the move through the buy points. That's a decent day. But if I go 0 for 10 on a couple days in a row, I'm either picking the wrong stocks or the market's not fitting my entry points, my strategy, and then I size down again. Right now, very middle of the road. The volatility is just all over the place in the market, so that makes my swing trading, low risk swing trading style, not as effective, so that's also bringing my position size down. Studying the characteristics of the stock that you're putting on the trade is also very important. So like AEHR, where it's a low float and it's going to go all over the place, I'll probably have to size a stock like this down a little bit. But where we go VTRX, where the average true range or the typical volatility of the stock is much, much less, then I could size this up much, much more than AEHR and not have the same type of risk on the trade of a stock like reversing lower. Now, I'm not going to make as much, but we're in a bear market. We're not trying to hit any home runs right now. Risk is our first priority, so we got to be cautious of that. And also, if you study the left side of these charts or the stocks that you're trading, you'll see the characteristics like, does the stock respect whole numbers? So when it comes into $300, do buyers come in and support that area? Does it respect key moving averages? That's going to help you place your stop loss in more reasonable places. And the more that the price action of the stock respects key moving averages and whole numbers, the tighter stop loss that you can place, and the tighter the stop loss, the larger your position size that you can take while still keeping the same amount of risk on any single trade. And then finally, the stock that I'm buying, is it the strongest stock in one of the leading groups in the market? If it is the leading stock in the leading group and the markets are also starting to find its footing, that's what's going to help me size up the trade a little bit more. But like I said earlier, outside of biotech and oil and gas stocks, coal a little bit, I don't see a very clean, like a very true potential leadership group that's more growth driven. Now, the oil and gas shippers, like TNK, I just posted this on Twitter. This is like the leadership group right now, but they're already extended, so I'm not chasing this higher. So yeah, so to wrap that up, position sizing, market, your previous watch list, previous trades, characteristics of the individual stock, and then is it a leading stock in a leading group that will allow us to size up a little bit more. Right now, there's really none of that in the market. So honestly, my position sizing with MYOV probably should have been lighter. Probably should have just been a 5% position. If I'm being honest and admitting my mistakes. So great question there. I will turn that into a video because that's a great question and something that a lot of new traders struggle with. All right, that's going to be the live stream. If you guys are interested in doing a trading audit, I know I'm like 4 weeks backed up on editing those videos, but I'm starting the series where you guys call in, we go on Zoom, and then I look through about a month of your previous trades, give you feedback on what I saw there. You guys can ask me questions like a one-on-one. Usually those last about an hour, hour and a half, completely free to do. But then I take that, clip it up, and then make a YouTube video out of it. So if you're interested in doing that, you can email me at stocktrickswithnick@gmail.com. That email is in the description below. Another big thanks to MarketSmith for sponsoring this video. If you guys enjoyed the trading research platform that we used today to break down each of the stocks, there's also a link to try it out yourselves in the description of the video. Thank you guys for showing up. This was super fun. I'm glad we're back into the swing of things, and I'll see you guys in the next video. Have a great rest of your week.